All right, let's talk about financial success in your 20s, but probably not in the way you're thinking. We're going to skip the usual stuff about budgeting and picking stocks and get to the principles that really build lasting wealth. Let's jump in.
So, what if I told you that the biggest, most powerful moves you can make for your financial future have almost nothing to do with spreadsheets or investment apps? That's the big idea we're digging into today. The theory is that real financial success is built on something, well, a lot more human than just crunching the numbers.
So here's our game plan. We've got 5 key principles we're going to walk through. We'll talk about mastering people, building systems, understanding your own money psychology, why survival is so important, and finally, playing the long game. Think of these as the pillars for building a really resilient and successful life.
Okay, first up, the idea here is that your single greatest financial asset isn't actually in your bank account. It's in your relationships. Because at the end of the day, your income, your opportunities, your career growth, that stuff doesn't come from a spreadsheet. It comes from how well you can work with, lead, and inspire other human beings.
This quote, which Dale Carnegie highlighted in his legendary book, How to Win Friends and Influence People, just nails it. You've got Charles Schwab, a total titan of industry, saying his greatest asset wasn't his financial genius, it was his ability to get people excited and motivated. That is such a powerful reminder that the best returns often come from how you invest in other people.
So here's the bottom line. Your technical skills, coding, writing, designing, whatever it is you do, that'll get you in the door. It gets you the job. But it's your people skills, your ability to communicate, to empathize, to lead. That's what gets you the promotion, the big project, and the real earning power. And honestly, in a world where everything's getting automated, these uniquely human skills are becoming more valuable by the day.
All right, let's roll into our second principle. So, after you get a handle on how you interact with others, the next big step is mastering yourself. And that's not about just trying harder or using more willpower. It's about building smart, automated systems for your life.
In his book, The E-Myth, Michael Gerber has this great term for what most of us do, management by abdication. It's that thing where you hand off responsibility, maybe to a budgeting app or a financial advisor, and then you just kind of run away and hope for the best. That's not a system, that's a gamble. A real system doesn't mean you check out, it means you build a framework that gives you more control, not less.
So, what's a good system actually look like? Well, it boils down to 3 simple, repeatable steps. First, automate your savings. Just pay yourself first, right off the top, no questions asked. This builds your wealth in the background. Second, schedule your growth. Literally block out time on your calendar to learn new skills. Your skills are what drive your income, so you have to invest in them. And third, do a quarterly review. Just check in and see if your systems are actually working for you. These aren't just chores, they are the gears of your personal success machine.
Okay, this next principle is a really big one because it's all about the invisible scripts that are running our financial lives. It's all about understanding that your personal history with money, the story you tell yourself, shapes every single decision you make.
The author Morgan Housel just captures this perfectly in The Psychology of Money. See, we all like to think we're rational, right? But our view of money is totally shaped by the tiny, unique slice of the world that we've personally seen. What seems completely normal and logical to you might seem absolutely bonkers to somebody else, and they'd both be right from their point of view.
And this comparison just makes it crystal clear. If you grew up with a lot of financial instability, you're probably going to see risk as a direct threat to your survival. But if you grew up with wealth, you might see that same risk as an opportunity for reward. See, neither of those views is wrong, they're just the product of totally different life experiences, and the most important thing is to understand which story is shaping your decisions and the biases that come along with it.
This brings us to a really powerful and kind of counterintuitive idea. When you're in your 20s, the big temptation is to chase these massive returns. But the real goal shouldn't just be to get rich, it's to become financially unbreakable, to build a foundation that can't be wiped out.
Take a look at this number for a second. Morgan Housel's research shows that a staggering 40% of publicly traded companies, we're talking big, successful companies, eventually lose almost all of their value. Just think about that. They get wiped out. This is such a critical lesson for our own finances. If you take on too much risk, you can lose everything and get kicked out of the game for good.
So the crucial point is this: getting money and keeping money are 2 completely different skills. Success isn't about getting the highest possible returns. It's about getting good returns that you can stick with long enough to avoid ever going broke. You have to be able to survive the inevitable recessions and unexpected disasters to stay in the game long term.
And what does this whole survival mindset really get you?
It buys you the single most valuable asset there is: options. It gives you the time to wait for a great investment, the flexibility to quit a job you can't stand, and the freedom to take calculated risks on your own terms. Being unbreakable gives you control over your own life.
Okay, on to our final principle, and this is the one that really ties everything together. Once you've built this foundation of people skills, systems, self-awareness, and a survival mindset, you are finally ready to unlock the most powerful force in all of finance: time.
Now, to really understand the long game, we have to talk about something called tail events. This sounds a little technical, but stick with me. These are the extreme outliers, the 1 in a million home runs or complete wipeouts that actually account for almost all of the results. In investing, it's that one stock in your portfolio that delivers 99% of the gains. In your career, it could be one project or one connection that changes absolutely everything. Most things have a small impact, a tiny few have a massive one.
And this chart on venture capital shows tail events in action perfectly. Look at this. Most of their investments either lose money or make just a little bit. The entire success of the fund, all of the returns, come from that tiny little sliver of massive winners. This isn't just a quirky rule for VCs, it's a fundamental law of how long-term growth works.
So what does this all mean for you? It means that success in your financial life probably isn't going to come from a steady stream of small wins. It's much more likely to come from a few really big decisions and from staying invested long enough to capture one of those rare, powerful tail events. Your job isn't to be some genius stock picker. It's just to be patient and disciplined enough to let compounding do its magic.
So, what's the big takeaway from all this? When you put these 5 principles together, the focus really shifts. It stops being about just managing money and starts being about building a truly resilient life. A life where your finances serve your freedom, and not the other way around.
So this is your foundation. It starts with your mastery of people. It gets automated with smart systems. It's guided by understanding your own psychology. It's protected by a relentless focus on survival. And it all gets supercharged by patience. This isn't just a random checklist. It's a powerful, interconnected framework for building the future you want.
At the end of the day, your 20s are when you get to pour the concrete for the rest of your life. You can choose to build on the shaky ground of chasing quick returns and hot tips, or you can build a deep, solid foundation based on principles like these. The choice is yours. So what kind of foundation are you going to build?